I'm Faisal aftab. I'm the managing partner and co-founder of Zayn Capital's Bitrate Fund. Zayn Capital is a platform play where we have two funds: an equity fund and a debt fund. I run the equity or venture capital fund focused on Pakistan, and then my co-founder, whose name is also Faisal, but he's known as Faisal Chaudhry. He runs the debt fund, which basically is more of a debt financing fund for fintechs in Pakistan and the broader region. The focus of our fund is on early stage investments in Pakistan. So we've done about 16 deals in Pakistan, agnostic to the sector of technology. So we invest in pretty much everything that, in terms of platform plays that we like in the country and we think have potential. But we look at everything with a fintech lens because the thesis is that this is the exchange of value disruption, where money itself is merging with the internet. And so we view all these platforms of capturing some form of economic activity, and especially in a country like Pakistan, where there's a large informal economy, we feel that these platforms are capturing that segment of the economy better than the financialized sector of the economy. Pakistan is actually a very vibrant technology ecosystem, but I would say it's more of a delayed ecosystem. The main reason, then this was part of our thesis why we felt now was a good time to invest in Pakistan. When you look at effectively all the comparable markets like India, Southeast Asia, MENA, everybody launched 3G and 4G in 2006 and 2010-11 roughly. In Pakistan, we actually didn't do the proper auctioning till about 2013. And really the adoption of 3G and 4G started in 2015. So the reason why I mentioned that's so important is because your total addressable market of active internet users, if I went back to 2014 and 15, they would say officially it's 30 to 40 million users, but in reality, the active number was between 18 million to 25 million, which was very low. So it became more plausible to invest in Pakistan after the 3G and 4G launch, where the adoption rate was rapid. Another main reason for 3G and 4G is important is because a lot of your middle income and lower income demographics can't really afford laptops and desktops. So smartphones are their conduit, especially Android cheap smartphones. That once that came into play, today, if you fast forward to 2020 or even 2021, that number is roughly around 100 million data users with 75 to 76 million active users. We had our first wave in 2013, 14, where effectively some level of startups were funded. These were your food pandas moving in, or Delivery Hero moving in, acquiring the local food delivery platforms. Then in 2017, 18, a lot of Pakistan dedicated venture capital funds started. So that was, I did one of those funds, which was my fund one, Laxin Venture Capital. So we were investing in the market. Then three other funds launched, but there were very few international investors that were really interested. But after the pandemic, I think what happened is that everybody realized that this is a market. The perception of the market was that it's not a very big market. It was just surprising to me. It's the fifth most populous country. But once investors realized what an opportunity Pakistan was, a lot of funds started coming in. The talent level is exactly the same as India. Pakistan being a former British colony, it's got the exact same structures, a very robust expat community if you look at Wall Street or you look at big tech, you find a lot of Pakistani alumni and pretty much around the world. So basically it's the exact same setup as India. The only thing that was needed was the capital. And I think the opportunity became more attractive because when you look at all the other comparable markets, a lot of the good value, early value has been extracted in MENA, in India, in Southeast Asia. And that's why investors pummeled in. I would have thought that it would be one particular sector. Fintech for sure has been the fastest rising sector in Pakistan, just because I think worldwide last year, since the pandemic, fintech has been the main motivation for most investors. But it's also interesting that you're not seeing like waves and layers like in other markets. For example, like you had your e-commerce wave, then you had your mobility wave, then you had your fintech wave and those type of plays. Because everything is happening simultaneously, so founders have seen all these models that have worked in Latin America, in Middle East, in South Asia, in India. And so you're seeing basically all these models play out together simultaneously. So I don't think I've seen in any other ecosystem this level of vibrance in terms of the type of companies that have not just been, come to the market to raise, but have actually raised decent chunks with both a good grouping of domestic and international investors. And again, like I said, this was because of that pent up demand in the market, where I think everybody saw that this market needed to catch up. So while it wouldn't look like a bubble for most people from the external point of view, in terms of what Pakistan, why people piled in so much money, I think it was actually opportunity. I would say that, the lending solutions, especially non-banking finance corporations with an embedded use case, those are actually the ones that are the fastest growing, along with your e-commerce, quick commerce, and grocery plays, just because they hadn't scaled that much in the past. The payment space is also growing very rapidly. We were always ahead of other markets. We had mobile payments for almost about, I would say, like the last decade. The only problem was that they weren't scaling to their full potential because they were just being used for over-the-counter domestic remittances. But now, because there's so many use cases, they're integrating with e-commerce platforms and all sorts of other, even your fintech platforms. So our portfolio is very diverse. So the way I've approached the market is my belief is that the world will eventually connect in a singular network in the future, many years from now. As I mentioned, everything we look at is from a fintech lens, but our portfolio has been across the board. It's been fintech, it's been quick commerce, it's been grocery deliveries, it's been travel, because all these bits and pieces of the economic activity in Pakistan, specifically in the informal economy, the objective is to identify the founders that are solving problems there and creating platforms that can scale rapidly, and to obviously capture big total addressable markets in those segments. Today, that I would say the top startups are Bazaar is one of the top startups in Pakistan. It's just done a Series B round, pretty massive. Airlift is another one. They're a quick commerce platform. Previously, they started off in the ride-hailing segment. Then they pivoted during the pandemic to effectively quick commerce. Abhi Finance is a top startup. Postex is one of the top startups in Pakistan. Bookme.pk is among the top startups. If I had to put it on the top of the list in terms of fundraising, I would say it's probably, Bazaar, in my opinion, is the most solid one, given that they've done multiple price rounds and attained a pretty formidable valuation with strong investors. Yeah, so the government has actually been pretty helpful. In the first wave, the government set up I would say about 5-6 years ago, they set up the national incubation centers in each of the major cities, where they basically created spaces for startups to come together. Then one of the biggest things that the government did, which I think actually kind of really was helpful, in Pakistan, you weren't allowed to have holdcos. That was just a law that both Pakistan and India used to have at one time, but Pakistan specifically changed it more recently. So they allowed startups specifically to set up foreign holdcos and make the local companies operating companies. That is what unlocked a lot of the capital. And what that did was gave foreign investors a lot of comfort that they can invest in the holdco. And it was more from a repatriation of capital perspective. And the government has also worked on some tax incentives as well. So I think from at least my perspective as an investor, the government has done a pretty good job of facilitating the ecosystem. So it's the number one element for me is the team, is the people, and their ability to execute. That's our strength in terms of being able to identify those people. So for me, typically it's, yes, we're looking at the deck and their presentation and running, cross-checking the numbers. But at the same time, I'm also spending at least 2-3 meetings with them and to try to understand them and the way they think. But apart from that, obviously, it's the total addressable market is another huge factor. The third one is timing. That's one lesson I've learned in my life, that you could have a great idea, but if the timing is wrong, you just won't scale. So for example, EV plays. Lots of EV plays have come. We haven't backed them yet because we think the timing is maybe a couple of years from now, in terms of today. Yeah. So short term, I'm extremely bearish on the venture capital industry. And just speaking more from a capital flow perspective. So I think you're not going to have an abundance of capital. Last year, I will say, was a bubble worldwide in terms of tech, where a lot of companies were just getting funded. Rounds were getting closed in a couple of weeks. That's really ridiculous. I think the number of investments money-wise might end up being fairly close to what they was last year, but I don't think companies are going to find it that easy to just raise on, a couple of big brands of alumni work experience and a nice deck. I think they're going to have more substance in terms of fundraising. And then we anticipate this could go on. Like liquidity to come back to abundant levels is not going to happen until the Fed cuts again. And speculatively, that could be all the way to the end of 2023, if not Q1 of 2024. On a long-term curve, this is probably one of the best opportunities. I think that these 36 months since March 2020 is where bulk of the value extraction is going to happen in the startup ecosystem. And really the companies that were funded in the last 24 months, I think these are going to be the winners over a 10-year horizon. Especially Pakistan, I think, is going to leapfrog, along with all frontier markets, also when Web3 becomes more important later this decade. So I'm more excited to see the different types of companies that come in potentially in the future in future funds. But I think this is the best opportunity in Pakistan right now. I think people are living right now in probably the most interesting time since the 1930s, where the world is effectively changing. The patterns we were going through at that time were basically the industrial age, disrupting the agrarian age, also change of confluence of a rising empire, the United States, challenging an existing empire, the United Kingdom. That creates disruption, and disruption breeds opportunity. I think it's the same period, the same thing is happening today where tech is disrupting the industrial age. So much innovation is going to take place this next decade. The pace of adoption of technology worldwide will be faster than the last 30 years combined. And with Web3 coming into play, the whole back-end infrastructure of the internet is changing in how we exchange value. So it'll be very interesting to see. And I think opportunity is abundant for people in this generation. I do think creative skills and innovative skills are going to be far more valuable by the end of this decade versus your logic-based skills, just because AI is the cost of training AI is falling by effectively 60% a year. So that adoption is going to be a lot quicker than most people believe. So it's for the viewers, for the people out there to exploit this disruption. And I think this is how great fortunes are made and great businesses are made in times like this.